Hey, this is Caleb from Financial Hub Forex Academy. This video is to let you know that we are having our first Forex Masterclass from the 11th to the 13th of March. This class will be held in Nairobi town at our head offices in JKUAT Towers, former ICA building. We are only limited to about 10 students and so far only 5 seats are left. You will be excited to know how to make an extra income away from your day-to-day activities. So be sure to comment below for more information or give us a call to book your seat. And we will see you there.
Hi guys, welcome back to another episode of the Technical Forex Market Breakdown. So this is episode 38, and last week we did some good analysis, so we gave out some few trades. I personally did Euro Yen, gold and oil. I'll do the same pairs today, so I'll brief you on what happened, what is happening and what is likely to happen. So the biggest stories in the market, obviously the first thing is coronavirus, still affecting markets big time. We haven't found a cure. In fact, the virus is still spreading across other countries, and this is a big impact on markets. Stock markets yesterday saw the worst days ever since 1991, almost double-digit corrections. So we saw most markets go down plus 5%. So markets went 6, 7, 8% depending on which country and which market. So today obviously you can see some markets have rebounded, some businesses are going out of business, and this is obviously not good. We might probably be headed for an economic recession and a bear market. These are some of the things that if you take our course you get to learn how to analyze and to come up with such ideas. So besides that, we have some good package coming up. So we have an announcement to make, and in the next 1 month we'll be releasing a new product. So the product is basically a subscription package. So for only $35 you'll be able to get some of the trades we are taking, you'll be able to get some lessons, and you will also get our book. So we will basically guide you into how you'll trade the markets. So we'll be sharing with you videos every week, and the videos will contain lessons. So for us, we will not always pinpoint to you this is the trade we are taking. Instead, we'll show you why we are taking this trade and why we get out of certain trades, and this is how you get to learn. So we are trying to make sure you learn in an explicit way, and that's basically what will be happening in the next 1 month. So many people are excited about the product, and once it's launched, we'll communicate to you how you can get it, how you can be able to be part of the community. We're also trying to build a community of serious traders. So we have traders who are doing it in a legit way, and there are others who are doing it in a shoddy way. We're not interested in people who are doing things in a shoddy way, because for us our main interest is developing the industry, and as we develop the industry, to be part of the people who play the role in making this a legit business done in a legit way. So we are trying also to surround ourselves with serious people who are seriously interested in trading markets and doing it full time. That's the main reason why we'll be doing the subscription package. So in the next 1 month, probably before mid-April, we'll have launched the product, and hopefully some of you guys will subscribe and be able to learn from us how we trade markets. Now the videos will not be like the YouTube videos, they'll be more in-depth. I'll be covering every detail about a trade and showing you how the trade was reviewed, and you can be able to learn a lot of lessons from that. So that's basically it, and from that now I'll go to the technical breakdowns. So yes guys, we're down to the technical breakdown, and I'll start off with gold. Last week when I was doing the analysis, gold was trading at around 1580, 1590. I outlined that I was expecting a move higher to touch 1750, and yep, the move came along and the markets took out 1650 and moved higher. From last week's close on my weekly chart, as you can see, this was a strong candle engulfing around 2 candles, and to me this is an indication that probably we might be getting momentum at least to 1750. So I'm looking for a long. I'm still long. I'm expecting a move higher to touch 1750 before looking for any significant shorts in the market. I expect a big correction after a touch of 1750. I have my reasons which I can probably outline, So if you study these markets keenly, you can see that from the time we took out the 1350 level, which was a consolidation level for a very long time, we had a move, then we had a correction, which was a significant correction from around 1330 all the way to 1275. Then we had this extended move, and we had a correction from 1550 to 1450, and now we are getting this extended move all the way from 1450 to 1750, a 4000 pip move. From that level, we can probably expect a correction 1000 to 1500 pips, depending on the volatility of the markets. So currently markets are too volatile. A 400 pip move will probably take a session, and from that we can deduce that we will probably get 1000 or 1500 pip correction. But once we get to 1750, I will turn my bias to short, at least for the short term. Long term, I still expect gold to move higher, expect 1850, 1950, and probably even the 2000 mark before the end of 2020. So this is the daily chart. On the daily chart, you can see precisely what I'm talking about. So when I did the video, I remember precisely it was after the formation of this inverted hammer, and immediately after that, you can see we had some bullish momentum pushing markets to 1650 and now higher. So we have gotten to 1700, which is R2, and we are currently getting a correction to touch 1650, which I kinda anticipated. But as long as you're trading above 1650, I'm long at least to 1750. But if we get a significant close below R1 and 1650, then probably we'll be lining for a correction to 1600 before they move to 1750. So primarily I have two probabilities. One is we bounce off this level and move to 1750, or break this level and move to P 1600 before the long to 1750. So generally I'm looking for a long to 1750. If I go down to the 4-hour chart, there you can see we are bouncing off 1650. We haven't spiked P yet. This is not a very good bottom formation again, but I think as long as markets are trading above 1650, just like I said, I'll be expecting a move higher to touch 1700, 1725 and 1750. Nothing will change that unless we get a good close below 1650, below 1650 P level, and probably even 1635. If you're trading at the 1625, then you can expect a move to 1600 before they move higher to 1750. So that's my bias on gold. I think there's still 1000 pips to be made from that trade, and you can capitalize on it. So the next pair that I look at is oil. Actually, it's not a pair, it's a commodity. And starting from the weekly chart, I remember the last time I did the analysis on this pair, I had anticipated a move to $35 mark, but I never expected it to be this fast. So I couldn't have prophesied the move would have taken less than a session to be complete. So anyway, the move was catalyzed by the price was between Russia and Saudi Arabia, and you can see oil went all the way to touch the 27.3 mark for rebounding higher. So we have touched $35 mark, which is my target for this commodity. So if I start off from the monthly chart, the reason I was expecting a move lower was we had the formation of a triangle. So we had this formation of a good triangle. So we had a drop, correction, a drop, correction. And now the drop has been touched by the support level. So we have made a low, but we have touched 35. If 35 holds, depending on how the deal goes between Russia and Saudi Arabia, then we can expect markets to rebound, and I think this one can rebound pretty fast, unlike what most people expect if the price was settled. So if the price was settled, oil might rebound from 35 to 50 pretty fast, but if they are not settled, then you can probably see continuing downward prices on oil. But for me now, there is no trade precisely on this commodity for now. I'd be lying if I tried to identify a trade setup. For me here, nothing is clean, nothing is clear for me to execute a trade. I'm a technical trader, not fundamental. So from the technicals, there is no precise setup that I can execute. So for now, I'm out. I'm stocking markets. Probably will get a gap close. I don't know how fast that will happen. Very many factors affecting it, but I wouldn't try to anticipate this move higher. So that's my outlook on oil. Pretty much nothing, just watching. And I'd probably advise you to do the same, because the markets are volatile. And when markets are volatile and you don't have a clear pattern forming, then you'd rather be out or capitalize on other moves. But that's my outlook on oil. Probably made your money on this down move. Preserve the money made and wait for the next moves to develop, but don't rush to anticipate a developing move. So that's my outlook on oil. So I'm going to look at Euro Yen as the last pair. I'll start off from the weekly chart. So this is the weekly chart of Euro Yen. Last week I gave out a trade highlighting that we were probably going to go lower, to sink lower to probably the 117.8, 117.3 dollar mark. The markets respected my analysis and went down, moved lower, ultimately to the $116 mark. After that we had a strong pullback to 119 and we're probably going higher. So on the daily chart we have a trend line bounce at 121.3, the second trend line bounce, and now we have a move higher. So probably we'll get a move to P. If we get a move past P, we may get a move past R1 and R2 to touch 121.3, but that is not highly likely. My main focus is I'm waiting for a short trade at the $119.8 mark, and if I go down to the 4-hour chart, yeah, you can see it's clearly marked. So yeah, we had this gap closure and it seems like we will touch this channel for the third time before moving significantly lower. First target 115.8. So my main idea is waiting for a short trade at this point. A break of P and this trend line will however nullify my idea, and a break past 120.8 will mean a reversal, just like what is happening on Euro USD. So that's basically what I have on Euro Yen. I'm looking for a short trade at P. If we get a break past P, I'm looking for 120.8 to be taken out and the confirmation of a reversal, and then I'll try find an entry to the direction of the trend. But for now, I'm short Euro Yen from P to move lower, at least to take out on 16.8 and probably to touch $115.8 mark. So that's my outlook. That's what I have. Hope you guys will learn from that and execute those trades. Caleb will not be in today, so he won't be doing any pairs, but you'll see him next week on the other pairs that we'll be doing and other videos. So that's it. See you next time.